The decision of the International Monetary Fund to revise its its growth figures downwards as a result of certain risks that it's noticed are something which has certainly created headlines around the world, but also point to uncertainty at several levels in many parts of the world. What are some of these concerns? How does it affect us here in India? Joining us, Gita Gopinath. Thanks, Gita, very much for being with us. She's the Chief Economist of the International Monetary Fund, and it's a privilege to actually speak with you. And congratulations, firstly, on this fantastic opportunity you have at the IMF and the role that you play over there.
Thank you
and
so
that's
much.
Something that we've been watching out for. Why have you actually brought those growth forecasts down? What are some of the biggest risk factors?
We've revised the forecast down, but they are quite modest. About 0.2 percentage point for 2019 and 0.1 for 2020. And these reflect both one-off factors in some countries, like in Germany, in Italy, and in Turkey. But we're also seeing a general weakening of market sentiment. You see that in industrial production outside of the US, in purchasing managers' indices. What we are flagging, though, is that the risks to a bigger downward correction are quite high and are rising. The ones that are very important are trade tensions, an escalation of trade tensions, a worsening of financial conditions, Brexit, and China slowing faster than we expected.
Right.
These will be some of the big ones.
And in this, where do you see India? Do you believe, because the report has said that India's growth is going to be reasonably okay, lower oil prices is something that's going to benefit us. Where do you see India's economic growth going?
India's growth for 2019 is forecasted to be 7.5%. That puts India in the bracket of one of the fastest growing economies, large economies of the world. So the Indian economy is quite healthy. We revised it up slightly, and that was because of lower commodity prices and the effect that would have on monetary policy.
A little part of the report actually speaks about the need to respect institutions and the need to back them. In India, we've had this huge debate now with the Reserve Bank of India and a sense that the government was trying to interfere in its functioning. Is that a concern for you?
The Reserve Bank of India, the inflation targeting framework that it has been working very well. What we strongly support is operational independence for all central banks in the world, and that has to be important if you want to maintain macro stability for any country.
Yeah. Just a couple of months now for elections in India. You've had a chance, obviously, to look at the promises which have been made by this government over the last almost 5 years. On the one hand, you've got the ease of doing business report in India, where we've done quite well. You've got the actual implementation of GST, but there are a couple of concerns there. But going forward, where do you see the India story? Is it a glass half empty or a glass half full? Because when it comes to things like employment, a lot of people would say we are nowhere close to where we need to be to sustain the kind of growth that we desperately require.
We certainly need to be able to create many more jobs. I mean, that has been a perennial issue for the last many years, and that has to be addressed. We also have some serious stress in the agricultural sector, and that is another area that we will need to do much better on, and it should not take the form of loan waivers, but more in the form of, if we were going to give support to farmers, it would be cash support, but not necessarily in the form of input subsidies and the like.
Yeah. Is that an area, in fact, that is what I was going to ask you next, agricultural distress, the fact that we've seen record numbers of farmer suicides in so many parts of the country, the inability to meet minimum support prices, and yet, some states saying, look, huge subsidies, we've come into power, let's do that now. What really is a more logical, meaningful way forward in resolving this huge crisis which affects millions?
So these are some of the things that I mentioned already, which is that we've had loan waiver programs in the past. That is not a permanent solution. I think it would be much better to give cash transfers rather than to waive loans, because that would be much more broad-based and it would benefit all farmers, even if those who haven't taken loans but who are also under distress from fluctuating farm prices. This other useful reform would be with regard to insurance for farmers with respect to food prices. I think these would be important ones.
Yeah. Two small questions, one on GST and its implementation. It has been implemented, but there are still many taxes. Is it still too confusing? Is it still something that is a work that needs to be worked on further?
The implementation is improving, and we've seen attempts to do that. I mean, I think it's to be commended that the council, the GST council, has been working hard on trying to fix the glitches. At the same time, the tax revenues that have come in, the indirect tax revenues that have come in, are weaker than were expected, which is partly a reflection of how it was rolled out and the implementation issues with that. And that would have to continue to be fixed.
Yeah. And one final question on implementation. We've had demonetization, obviously. It's been a while now. There's been a lot that's been said about it. But again, is that something which we have recovered from now in this country, or is the impact of demonetization, the fact that it wasn't implemented properly, still a lasting concern for you?
I've recently looked at that data quite closely, and for the indicators that we looked at, which is in terms of employment and in terms of credit growth, the effects seem to have been mostly front-loaded, and we don't really see that much of an effect lingering on, but there could be effects when you look at certain other kinds of indicators.
Yeah. And sorry, one last sort of question on China and the United States and the situation there now, the fact that there seems to be a bit of a peace at the moment, but going forward in terms of everybody's economic growth, a resolution to that, how important is that?
Oh, that has to be crucially important. It's one of the main things we flag in our report, which is that a de-escalation of the trade tensions, a return to certainty about trading rules, an improvement of the WTO. I mean, these are all essential to make sure that global growth remains substantial.
All right. Well, Gita Gopinath, thanks very much for speaking to us. There you have it, the Chief Economist of the IMF telling us a little bit about why the IMF has projected its figures this way, also speaking fairly extensively about India and where she sees the Indian economy going.